Moneycontrol. This is Shraddha Sharma and you're watching Reporter's Take. Bharat Bond Exchange Traded Fund has come as a new opportunity to invest in the bond market. Let's get Moneycontrol's Himadri to answer more questions on that. Hi Himadri, welcome to the show.
Hi Shraddha.
So first let us understand what is the Bharat Bond ETF.
Well, Shraddha, if you remember, in 2019 budget, Finance Minister had announced launch of bond, had given approval for debt ETF.
Right.
So this is similar to the equity ETF that was launched earlier, like CPSE ETF
Right.
and Bharat 22 ETF. But this is on the debt side. So Bharat Bond ETF will invest in bonds issued by PSUs or public sector companies. Now, Edelweiss had bid for launching this fund and they have received the mandate to launch this fund.
You said Edelweiss will be launching the fund. When is the launch date and what are the features of the bond?
Well, the fund is launching today itself and will remain open until December 20th. Now, in terms of features, this will have a fixed maturity date and different indices tracking specific maturity years. So it will have two variants maturing in 3 years and 10 years. And the fund will be redeemed and the money will be returned after the maturity date to investors. Now, this will invest in AAA rated bonds issued by public sector companies. Right. Maturing on or before the maturing of this ETF. So there will be two indices like we spoke. So the first index will be Nifty Bharat Bond Index. This will mature in April 2023. And Nifty Bharat Bond Index, the 10-year variant, will mature in April 2030. Now, the constituents of these indices will be PSU companies like REC, NTPC, PFC, NHPC, among others. So, in all, there will be 15 constituents of on the index, and the issue size for the 3-year variant is set at 3,000 crore with the option to extend by an additional 2,000 crore. And while for the 3-year variant, there is an option for investing 4,000 crore with an option to invest, extend up till 6,000 crores.
Alright, so various PSUs will be the constituents of the bond.
Yes.
But, okay, help us understand, like as investors, why should we invest in the bond?
Oh, that's a very good question. Now, firstly, it's a very low cost structure. Now, the USP of this fund, it has wafer thin expense ratio. So in mutual funds, there are these expenses which are paid to manage a fund. So for this fund, the expense ratio is only 0.0005%. Right. So this bond will be the cheapest mutual fund in the world.
Okay.
And the second one to talk about is it's a conventional debt fund. So the fixed maturity feature of the ETF will provide predictability of returns. There'll be transparency, there'll be daily portfolio disclosures as against monthly portfolio disclosures in terms of other funds. And lastly, it will give tax benefits. So as with other debt mutual funds held for more than a year, a period of 3 years, investors will be able to get the benefit of indexation. So these are the best benefits that one can look for.
Yes, and plus the cheapest mutual fund in the world.
Exactly.
Thank you, Himadri, for joining us with those insights.
Welcome. Welcome.
That's all for today's episode of Reporter's Take. For more news, views and updates, stay logged on to moneycontrol.com. Thanks for watching.